quite a bit of news that should be boosting the market. The decision by the CBK to raise interest rates quite aggressively, 550 basis points. It's now coming in at 16%, almost matching inflation at just over 17%. And also this extended credit facility from the IMF, the shilling at around 98 shillings, looking better than we've seen it. Are we going to see it slowly get stronger and get stable?
Yes, I think slowly we're going to see the shilling get stronger because it's come from a high of 107 and it's now at 98. I think things are looking better, and with the funding that is coming from the IMF, I think it's going to get better.
Okay, the funding from the IMF, we've been waiting for the IMF to have their review of the state of the Kenyan economy on policy decisions. Are there any conditions that they've set on the government, issues like reining in fiscal spending maybe?
Sorry, I didn't get that.
What, has the IMF set any conditions for the government in terms of this extended facility?
They've not made that public. They've not discussed what requirements that they'd want the CBK to fulfill and Kenya to fulfill. But I'm certain that they'll lay out some requirements for CBK to fulfill and Kenya as an economy.
Other measures to support the currency, Cynthia, we're already hearing that within the East African community there's talk by officials of banning forex trading across borders. Those kinds of exchange controls, would they help the currencies in the region? Because it's not just the shilling that suffered.
Yes, we've seen the Tanzanian shilling and the Ugandan shilling suffer as well. So I think that control is going to help. It's going to reduce the amount of playing around, so to speak, with the shillings and in the foreign currency. And yes, I think it's going to help.
Okay, and then the raising of the CBR, what kind of impact is that going to have on the fixed income side? We've seen Treasury bill rates rising in Kenya, returns slowly dwindling for investors in fixed income securities.
Liquidity is still a problem, so fixed income is also going to suffer from that. Interest rates are increasing, but we're not seeing many investors getting into bonds because of tightened liquidity. I don't know. It's difficult to tell how the situation is going to be going forward, but it's going to be tight. Okay,
let's move on to the equity side of the market. It's exciting if you're a bargain hunter, but even those bargain hunters have held back. So we've seen some bank results coming through, companies performing better, but we know valuations are at their lowest at the moment. Where would you be advising investors to go into?
Banks are looking good. They're very cheap right now, and we've seen something like KCB, for example. It's a very strong stock. I think investors are realizing that there's an opportunity here and they're trying to grab it. We saw it coming from 14 shillings to around 18.5 today. And I'd advise investors to get into these lowly priced stocks at the moment, because I think they're going to get better.
And what about the PEs? Because many investors choose the blue chips, the KCBs, the equities, but some investors had argued they're still quite expensive stocks.
No, KCB is at around 5 times PE, which I think is very low relative to what it usually is in during good times. So I think it's something that they should consider getting into.
Okay, what about other stocks? We know that telecoms continue to account for about 77% of daily trades, but Safaricom fluctuating between 2 shillings 95, 3 shillings and 5 cents. It's not a good looking price.
Yes, it's more difficult for telcos. They're not moving much. When Safaricom moves, it moves 5 cents and below. So I don't think that telcos would be a good place to get into right now.
And then it's also reported in the Business Daily, Cynthia, that the NSE is adopting a FTSE-based indexing system. What does that mean? How would that help the weighting of stocks? Because a lot of measures have been taken in this regard as well.
I've not heard about that yet, but the NSE is doing a lot to improve the way it does things, and I think that's going to help.